Hey, good afternoon, everyone. Sam here, kicking off the state of the market for Monday, October 19th, 2020. I think everything is working here. I can see myself on a delay, I think. So I think we're good. Hopefully, somebody lets me know if we're not. So if you have any questions for me as we go along, just feel free to put them in the Facebook chat and we'll get to them. Um, at least for now, let's. I think everything's working here. So let me just show you a couple things here. We're going to be talking about the state of the market today and the basically the big picture that I'm seeing kind of setting up here going into the election. Now we do have a little bit more light in here. Bear with me just a sec. Yeah, so we do have a lot of catalyst coming up here in the next 2 weeks. We do have the FANG earnings. We do have obviously the election, and then we have the stimulus talks kind of sandwiched in between. The stimulus talks are going on right now. The FANG earnings will be beginning next week, and then the election obviously is the first week of November. The main thing that I'm going to share with you is just that the markets really don't have great alignment here. One thing that I want to see when I'm looking at markets is just things to be aligned, right? I want to see things like the Aussie dollar, the VIX pointing lower, the Aussie dollar pointing higher, bonds pointing lower, the indexes well supported, and ideally with a squeeze. And I'm not really seeing that anywhere. Not to say that it's a short or anything like that, but when you have markets that are mixed, you tend to not have those big directional consistent moves, right? So it ends up being a lot more of a trader's market and less so of a passive investing market. And also, it ends up being a market where you really have to take profits pretty quickly. So let me just pull this up real quick, and we'll go ahead and dive in. So here on the SPY, just to start off the conversation, um, we are above a major level here. It's 38. I would write that level down on your charts because it's a pretty massive level. It's your 50-day simple. It's the center of your Bollinger, so it's the center of your volatility envelope. And if you look prior, it's also the previous highs. So we're still above that level, but you can see here that we've made a high here at right around 52. Came back, made another high here right around 350. Here's a low, and at least as of right now, we have a lower low, right? So all structures will change from the inside out, and this is the first step. Now, it hasn't broken any real technical barriers here. It did just pull back to the 21. Hasn't even pulled back to the 8 on the weekly. But the question is this structure here enough to begin something that's either downwards or a little bit more choppy? And it really does have the potential. Now, of course, if there is some surprise deal that comes through, in the form of stimulus between now and let's say Wednesday, then that could really reshape the charts. But I think the market's already pricing that in as a low probability situation. And really, we can't trade based off of that because we don't know what's going to happen there, right? So we just have to trade off the signals, the market generated signals that we get. And at least as of right now, we're hanging on the 21 here. You can see everything's kind of on a declining structure, right? Now, this doesn't mean it's a short. It just means that that momentum is done. So, for example, the 21 here needed to hold on a closing basis for the daily. You can see that it's broken there. The 195 is also pointing lower. So I won't spend too much time there on the SPY. I just think that the signals there on the index are somewhat unclear. And when they're unclear, usually the best way to adjust for that is just to adjust with your sizing, right? So you don't want to be super directional with long calls here. If you're inclined to be directional, do them more as verticals, do them more as butterflies, just things that will benefit from from some potential chop. bear with me just a bit because my computer's lagging with the stream here. This is the big signal I want to show you. This is probably one of the biggest signals that I see. It's not triggered yet, but it's so big that if it were to trigger, it it, uh, it sets up kind of a big scenario that you should be pretty aware of. So let's spend a minute talking about VIX here. So we just looked at the SPY, and there wasn't a lot of great alignment there, right? The weekly kind of still, the weekly's got upward trend, but it's losing momentum. The daily, it's broken some levels of trend, and it doesn't have great momentum. The 195, it still has excessive upside momentum as it starts to correct, which tells me that it's either going to try to chop or correct even more. So the signals there are real, at best, they're choppy. So let's check out VIX here because this guy is really setting up for something. Now, it is untriggered as of right now, but we've seen these patterns before on VIX, and just so you have historical precedent as to what could happen, this thing moves quickly, right? So just because it might be under 30 right now, it could be above 30 in pretty much a nanosecond. And if you look over here on the left-hand side, you see how everything here is aligned? Right? If you look at the squeeze, it's nice and flat, right? From a downward to an upward angle, which is rather ideal. Um, if you look at the momentum indicators, that one's near the floor with a positive cross, which is exactly where it should be, and this one's right at the center with a positive cross, which is exactly where it should be. Let me see if I can get some more light here. There you go. Thanks for putting up with that. I don't know why it's so dark. It seems like it's very dark on the stream, but my house is very well lit. So, okay, Sarah. If we move that over here to the to the daily, you see how you have a high compression squeeze here? These tend to be the most explosive squeezes, and they tend to go counter to the trend. So on VIX here, just eyeballing this weekly over here, you can tell that we're in a downtrend, short-term downtrend. And so when you have a high compression like this, understanding that the high compression squeezes tend to fire against the grain, against the grain would be up here, right? So what do you have now? Well, you have a little bit of a base structure here on VIX, right? And it's pretty sizable. It's pretty much all of September into this month. And it's basically from 30 to about 25. So there's about 5 points of coil here, and that would give you a 35 print, which would put you up here somewhere if that fired long. The thing is, and the reason I'm spending so much time on this, and the reason I think you should be aware of it, is because if this fires higher, the chances of the market continuing to go higher alongside with it are very low. Of course, you want to wait for your trigger, but that would be the case. Also, not only that, but even after this daily has fully, if it fires long, mind you, right? There's a probability it could fire short, of course, but it doesn't seem that way. So if that were to fire long, after the daily squeeze has burned itself out, then you now have a weekly squeeze behind it, right? So it's not like, well, the daily fired long, it'll burn out and then the VIX will come back in, because under nested within the daily is a weekly. So just stuff you should be aware of. Now let me just kind of keep going here. What had been the two leadership groups so far? I don't see anybody asking any questions yet, so you guys must just be fully understanding everything we're putting down, which is great. So we'll let this chart load here, and then we'll start talking about some leadership groups. So there's been two leadership groups in this market, as I see it. In tech, it was the semiconductors, and outside of tech, it was the transports. If you want to see an example of that, just go to FDX, and you'll be able to see a pretty good example there. So let's kind of take a look here to see what the leadership groups look like. So first up is the transports, and I like to look at the transports with the DJT. I just think it's one of the more pure ways to do it. So we'll let that load up here. And you can see that the transports, while they still are holding structure, they are not early in their move, right? And what I mean by early in their move is just you have all this room. If you think about the 21 on the weekly as a potential zone of support, you have all this room here. back to that level. It's not a big deal, right? Of course, it's still holding the 8, so this is still a very bullish chart, and in no way would suggest a short quite just yet. But you're starting to see a little bit of crack here, right? Today you closed below the 8. Your momentum on the 195 rolled over, right? You can see that over here. If my computer would draw, which it doesn't want to. All right, I'm just going to box it in since I can't make circles. And you have a 2-hour squeeze that's now wanting to fire short, right? So it'll come across a little bit more when I show you the SOX, which is the semiconductors, but you should be aware of this, right? When the leadership group looks tired, and I'm not saying this is a short by any means, this is one of the strongest charts in the market, but it is a tired looking chart. So when the leadership groups start looking tired, usually that leads to a little bit more chop. Now let me just show you this one as well, which is the SOX, which is going to be the semiconductors. And this one straight up hit a target. So I'd be pretty cautious here on the semis specifically, because one, they're in tech, and tech is the frothiest market, and two, you'll see it when I show you the why this level is so important. They rung the bell. They rung the bell essentially. Now, of course, can they go higher? They can, but the whole point of what I'm trying to stress here to you guys is not go out there and short or sell everything or anything like that. But when you have leadership groups that have hit targets with declining momentum structures, that is a warning sign. So if we spend some time here on SOX, understanding that this is a semiconductor index, understanding that the semiconductors have been the source of leadership. If you look at this level from back here, this is the February highs, and this is the March lows. This is the most significant swing on the chart. I mean, there's not going to be a more significant swing than the COVID swing. And if you run the retracement on this swing, it gets you a 1618 right up here, right around 2447. And you see how it came up, price came up right to that 2447 level, gapping up multiple times, mind you. This is very important. Hopefully it comes across. You gap up multiple times, you ring the bell up here at 47, and now you've burned up all your momentum. So this thing could fall quite a ways and cause some problems. The alternative scenario is that we somehow consolidate up here and then take out the 47 level. But we would need to see some consolidation, right? It's very unlikely. It's almost impossible to go to a 1618 of such a major swing like this and take it out on the first try without coil. Coil means a squeeze, some kind of compression that leads to expansion, and you don't see that anywhere here. Not even close. So you're going into a major extension target after gapping up multiple times with declining momentum structures and no coil. The probabilities that this breaks higher sooner than later are low. So either consolidation or an actual legitimate pullback in the semis. So I'm not sure if I'm going to keep going here. I mean, really the main thing I just wanted to show you was going to be kind of the leadership groups. You should be aware of what's going on in VIX. You should be hyper aware of that. No crying. No crying in the room or elsewhere if that VIX thing bites you in the butt, because we've been talking about it. So it's a very big signal. And if it plays out, you really easily could see 60 plus on VIX. So just something to be aware of. I do see that we did get one question here. Okay, try to buy the pullback on the 8 for the Russell. Well, David, I like that you're looking at the Russell because that one actually hasn't run as much. So I guess let me do this, because I don't want to come across as, it's just yellow lights that I just want to point to you guys. And of course, tomorrow we can bounce and whatnot, but it's got to bounce. Today wasn't really the problem. Tomorrow will be the tell, because today was the break day, right? Today we broke the 8. Today we landed on the 21. We broke a lot of intraday support, and we also triggered the momentum lower. So today, closing bad is par for the course, but tomorrow is going to be the tell. How high, if it does bounce, how high is it able to bounce, and does it retake the resistance levels that were the now resistance previous support levels that it had? That's going to be the key tell. So since you brought up IWM, let's look at this one for a second. Because if you're able to get past like just the immediacy of the moment, even if we were to pull back, whatever 5% or something in the indexes, potentially even more than that, this chart on IWM could handle it. So now I'm showing you IWM on a long-term scale. So it's monthly on the left, weekly, 3-day, and 2-day. The 3-day and the 2-day are not that important, so I'm just going to get rid of them. And what I want to focus on with you is the monthly, right? So let's get a little bit more action here. Now, if you look at this monthly chart on IWM, it's almost impossible to make a bearish case for it. This is probably as good as the IWM has looked, and I guess I'll just leave it like that. Hopefully it stays. So let's focus here on the left-hand side. You see here on IWM, you are holding structure here. You have these series of higher lows and higher highs, and the squeeze here, ever since the March lows, you see how the squeeze now has an upward bias to it? Mind you, this is on a monthly chart. So this overwhelms any of the daily stuff that I've been showing you or anything smaller than that. Even a weekly is overwhelmed by this monthly. And this monthly is almost perfectly aligned, right? Not only is it perfectly aligned, but you can see back here in this time frame, you see how similar that looks to where we are now? If you look at it in terms of the momentum structures back then, it's almost identical. Where you had this like flat base here, you break the low, you get back above the base, and then you just rip, right? So what do we have now? Well, you have this flat base here. You broke the base, just like back here, right there. Once you get back above the base, you get big, long-lasting trend that could last a year or longer. And that's 100% what's set up here, right? So I think even if we do see some volatility, the way that the charts are setting up, it's setting up as a buying opportunity because the markets are positioning beyond the immediate catalyst that we've talked about. So we've talked about the catalyst in earnings. I don't think that's going to be negative or positive. I don't think the market really cares about earnings, to be honest, because what are these companies going to tell you? They don't have any visibility that anybody else has, right? Nobody knows what's going to happen. You know, if they shut down again, all their earnings visibility goes out the window. So the earnings are irrelevant in my book. But the stimulus talks are not irrelevant, and the election is not irrelevant. Regardless of those two potential catalysts in the near-term future that you should be aware of and that you should understand as yellow flags, something like IWM here, and the reason I'm spending so much time on IWM, one is because it's got a very clean monthly chart, and two, because it's been a laggard group, right? So if you look at Apple, for example, it's not going to have this dynamic because it's already run and it's run for years. Whereas the IWM is something that nobody's really wanted, and it is something that was standing out as a laggard. And if this is able to break higher on this monthly, and it looks really perfect, then the market will generally go higher over the long run. So that's just a long way of saying in the long term time frame, like a monthly, it looks great. And I would bet that it breaks higher, and I would bet that the inflation narrative that the market is trying to get everyone to believe plays out. In the short term, however, you have very mixed signals. The monthly signal that I'm showing you is not relevant in the short term, and you have some things like VIX and dollar kind of creating some yellow flags. So if you have any questions for me, let me know. I don't see that many questions. We used to get a lot more people to these. We used to have like 100, 200 people. Looks like 25 are here today, which which is fine as long as you guys aren't that quiet. But I haven't gotten any questions. So I'll hang out here for another 30 seconds or so. If you have any questions for me, let me know. If you do not, then that is cool too, and we'll call it a session pretty soon. In terms of my book right now, I was a little bit more short than long coming into today. I took some of that off. I took about half of the shorts that I had off today. I left the longs to see if they can bounce tomorrow. So I'm open to a bounce. I'm open to a big bounce. I took off most of my shorts. I did go ahead and hold my UVixie. I took off part of it, but I left on the other part. and basically looking for the VIX signal to play out. I would not want to be without some kind of downside exposure with the VIX signal as big as it is. So I guess if it looks like I'm getting a few questions here towards the end. Yeah, so let me just show you this one more time here. Um, Actually, I'm going to cheat. I'm going to show you the VIX, but I'm going to show you the VIX on the NASDAQ because it fits my narrative better. And frankly, it's kind of right in your face. So remember, we're looking at VIX, regular VIX, but if you look at VXN, then you can look at the VIX of the NASDAQ. Now, this one's leading the VIX, so you should be aware of that as well, right? If you're looking at the VIX, you're actually looking at the wrong thing. Now, they'll both be relevant, certainly, but this is actually the one you should be looking at. And the reason it's so important here, and I'll go ahead and close with this, and then I'll answer any questions you may have. The reason the VIX is so important, it doesn't matter if you look at it with this one or the VIX, this is going to give you an earlier signal, certainly, because this is leading, VXN. But you created this big pop here, right? This was like the very short kind of crash that we had from February to March. And it was a big move in VIX, right? It went from 20 to 80, maybe a little higher. So it almost 4x'd, or it more than 4x'd, just in 2 months. But you can see that big move in VIX came from a relatively low base, right? And you can see that after the pop, the base, even though the market is at new all-time highs, mind you, that's key, right? The market made a new all-time high, the VIX not confirming. The VIX here actually is making a higher base, right? So you see how the base here is actually higher than it was when it initially kicked off down here. So when you zoom in on the weekly, you can see that as well, right? Here's a base, and then you get a little bit of a pop, and then you create another base slightly higher up, right? And now what do you have? Well, you actually have a high compression squeeze on a weekly time frame that's almost perfectly aligned. So it's a big one, guys. You should be aware of it. It doesn't mean it's going to trigger. It doesn't mean it happens tomorrow. It may not even happen. But I would say that the probability that this fires long, probably 65%. And if it fires long, it's not going to be like it was. At least I wouldn't expect it to be short-lived, like here, like in March to February to March, where it was just like really violent, but over relatively quickly. I would expect that given the larger bases that are forming at higher prices here on the VIX products, if and when this fires, not only will we get back to the levels that we were at in March, close to 80 on the VIX N, but it will be slightly longer lasting. So that's what I got for you. So I'm going to see if you guys have any questions. What do I prefer, VIX calls or UVIXY? That's a good question. I didn't even really consider the VIX calls. I just went with UVIXY. That's a good question. Honestly, normally I wouldn't even say the VIX. Normally I would actually say, if you're inclined to get short the market, just buy some puts, buy some put spreads. Give yourself time to let the idea work out. Stay long, but just have those in your back pocket. There's no real harm in that, I think, unless the market just skyrockets from here, despite all the signals. So normally I don't actually like VIX products, nor do I like UVIXY for that matter, even though I have a position there. Normally, if I have a read on the market or on VIX, I would express that with, you could do a delta 30, delta 10, put debit spread, and then that just, it's out of the money, but just give yourself time, and that allows for the idea to work. In terms of what do I prefer, whether it's VIX calls or UVIXY, man, since I rarely trade them, I really didn't even consider the VIX calls. I can tell you this. I think I went with UVIXY myself, and I think if given the choice between just those two, I would probably just still stick with UVIXY. It should be very, very similar. The VIX calls, I think, are going to be based more on the spot price of VIX, whereas the UVIXY calls are going to be based more on the futures relationship. But frankly, if the idea works out, it works out in both. So I would say they should be very, very similar. The UVixy ones will have a built-in leverage, and the VIX ones will be more liquid. But they're going to be very, very similar. So I would just weigh that out with yourself and see which one you prefer. What do you think about a Tesla 500 butterfly for October? Well, it's kind of funny you bring that up. I actually had that exact butterfly. So I had a 500 butterfly for October 30th. I did that following a trade from Bruce, but it actually turns out that he did it for this week, which makes sense. I'm not sure how I ended up with October 30th. I took that off today. So it was just one of those things that, I didn't have a great I didn't think the market looked that great, and I just needed to get out of something. So I take that off. What do I think about it? I think it's kind of a binary bet with the Tesla trade. The way that it's setting up, let's take a look at Tesla real quick, because it's one of the most interesting charts in the market. Not only that, but it's going to be one of the more interesting stocks in the market. Here's what I did, because I had that exact trade. I had the $500 Tesla fly. So here's what I did. I took that off today. When Tesla was green, I just went ahead and took it off with the intention of doing two things. One, setting the butterfly up for this week, not next week. Um, Now that you mention it, though, I could do either one. Here's really what I plan to do, because my butterfly that I had was 40/60, 500, 540, so it was 40 wide, so it was pretty wide, and somewhat expensive. So that's why I decided to go ahead and take it off, because I didn't want to mess with that. My plan, however, was to reopen it at the same level, so still open it at 500, but do it more narrow, right? And then that way I can treat it a little bit more like a lottery trade, where if I do, let's say, 480, so instead of making it 40 wide, I'll make it 20 wide, right? So let's say 480, 500, 520. That brings in my debit quite a bit, and it would allow me to hold the trade, right? Because with a larger trade, when it's 40 wide, if it starts to go against you, all of a sudden you really don't have a fly at that point, right? You just have a glorified kind of vertical. And at least when you keep the debit low by making it more narrow, 20 wide at 500, it's if it goes against you, well, you controlled for that with your size. So here's the thing with Tesla. It's a very interesting chart. And I would imagine that a lot of folks, are going to be watching it for earnings, certainly. My concern with Tesla here is really more broadly based. It's more based on the market than Tesla specifically, and more so also based on this pattern. So this pattern here on Tesla, where you have this big drop, then you have a pop, a drop, a higher low, that is bullish. So I'm going to mark the lows. Then you go back up, you drop again, you make another low, you pop again, you come back, you make another low. So you can kind of see the pattern there, right? It does have higher lows, which is bullish. However, I would argue that it actually hasn't made a fresh high, right? I would argue that this high here on Tesla is actually flat. If I could draw it in, that would be great. I don't think I will be able to. Dang, I can't for whatever reason. Here's the problem. You have a flat top and an increasing price structure, meaning that you're making higher lows on the way up, attacking that 460 level. The problem with this trade is that everyone's going to have the same stop. Right? So everyone who's in this box here is going to have stops below the 50, right? Which is also where the previous lows are, right? And you can see that when you have a wedge pattern like this is kind of a little bit of a wedge pattern here. Let me see if I can actually get this thing drawn on the screen. So you have a little bit of a wedge here. And the problem with these wedges is that they're very, very vulnerable at the downside. So as long as everything stays perfect, this is still a bullish pattern. But if things in the market are not ideal, you see how this lower trend line here is really the only thing holding up price. So you have this previous low that's holding up price along with the trend line. If you break there, you're more than likely going back to 360, which is your previous lows. So it's actually a very suspect pattern. Yeah, give it more time. Here's the thing: if you decide to give it more time, and the earnings miss, you're going to be toast either way, right? Because if you have a $500 butterfly out till next week, and let's say that the earnings let's say they beat earnings, that the stock still drops. If this dynamic starts to play out, you're not going to sniff 500. So your debit's still going to go to zero. I don't think that an extra week is going to help you, given the coil here. So I'd rather treat it more as a binary kind of bet. So if you're inclined to stay in Tesla for earnings, which, makes sense, I personally will be doing it via a $500 butterfly, but I'm just going to shrink the debits, right? So just make it very narrow, 20, 10 wide even, because you're basically just making a singular bet that after earnings, you go to 500. For myself, I'm going to do it for this week. Even though I had the exact same one you have for next week, I close that one today. Going to reopen it for this week with a smaller debit, and then just it's going to be kind of an all or nothing kind of trade. I wouldn't expect for it to hit necessarily, but the chart is still very good, and it's Tesla and it's earnings, so I'm willing to take a shot on it. But does that make sense that even if you were to go out until next week, and anything negative happens for earnings, if you don't go up this week, you're not going up next week, right? Does that make sense? So that's the way that I would look at it. Okay, I'm not seeing any more questions that I see. Let's see if I missed anything here. Okay, I guess I'm not. The SPY tanked today. How would you have played today? Well, like we were talking about, I did come into today, long UVixy calls, which I still think are a good place to be. I mean, here's the thing: I would never risk the full debit paid on that idea, and if the UVixy doesn't work out here, it's probably never going to work. So, I was very willing to hold those because they were already beaten down. So it wasn't like I was buying something that was, sky high to begin with last week. It offered a good hedge, and that VIX signal that I've been seeing has been in play for 2 months now. So I don't want to call it a signal, have it actually trigger and not be in the trade. So I did come into today long UVixy. That's one way to have played it. Really, only other way to have played it was to, and you'll have to look this up on your own, if you're serious about the intraday stuff. But if you look at the ES, which is the S&P futures, and then you pull up a 1 hour chart of the ES, look at the dynamic and just get rid of everything on the chart except the 200 simple moving average on the hourly time frame. And my computer's dirt slow, but let me see if I can maybe do this with you. If my computer wasn't so slow, I'd be more open to showing you stuff here. You know what? Screw it. I'm not going to do it. It's just my computer's too slow here with the stream. But just do this on your own. Pull up a chart of the ES /ES. Go to an hourly chart. Get rid of everything on your chart except the 200 period simple moving average, and look at the dynamic on ES around that level. Every single time that it's hit that level on the way up, it's bounced. Today was the fifth time that it's hit that level. Right? It hit it Friday and held. And then today, it did a weak bounce off of it on Friday, and then today when it came back, we were calling this in the room. We said it's not gonna hold this time, right? You don't hold 5 tests of the moving average, and on the break of the hourly ES support level, that's where you could have gotten short. Now, of course, depends on how quick you are. You could have shorted that level, covered at the end of the day, and you'd be good. I don't know if we continue tomorrow, but tomorrow is the day, right? What you need to see tomorrow, if you're bullish, is you need to see the market bounce, not just bounce, but bounce to a level where it's back on support. So, try to retake the 8 EMA daily. It's got to hold because today it closed at the 21. If you make a lower low tomorrow below the 21, it opens the door wide up for the 50, right? And that's going to be a big drop. So I would say, how would you play today? Pull up the chart of the ES, go to an hourly chart, get rid of everything on the chart except the 200 simple, look at the dynamic around that level, look to see how each time it's held, and then on the fifth test, which was today, that's when you short the level. So that's really the only play that you could have made. Thoughts on BlackBerry? I have no thoughts on BlackBerry. That's not a stock that I really care about. Sorry. There's too many much better looking tickers for me to trade BlackBerry. Gold relationship with the market. Well, the same thing that's moving the market is moving gold, and I'll have to wrap up here pretty soon because I don't have a fresh chart to show you here. Um, but the same thing that's moving the market is moving gold, in my opinion. So, what are the two main drivers for the gold trade? And I'll pause for dramatic effect so that you can answer on your own and be proven right or wrong. So the two main drivers of the gold trade are the low real interest rates. Real interest rates is a key word. Low real interest rates. And those have been going up, right? The interest rate has been going up. If you pull up something like TNX, that's the interest rate, you'll see it's going up. So that's not good for gold necessarily, right? And then the other side, the other half of the equation for gold is the dollar, right? So the price of gold is a product of two things: a low dollar, which we do have, and a very very low real interest rate, which we also have, but it's been climbing, right? So with the dollar, I have to remain bullish in the long run. I just think in the short run, if the market does get hit, let's say that the VIX signal plays out, I don't think that gold will be spared. So I think that gold and the market are basically tied at the hip with one story, and that story is an inflationary story. And if the market believes the inflation story, you're going to see it in stocks and you're going to see it in gold. And if it temporarily does not believe the inflation story, let's say that the VIX signal fires into November, the market starts to drop, it starts to price in deflation, then gold and stocks will get hit together. So just understand that gold is not a safety play here. Gold is not a safety play here. Gold is just like any other stock, and the things that are moving the stock market are the same things that are moving gold. Alrighty, so I think we got through it, guys. Thanks for stopping by, hanging out with me for a little bit here. You'll be able to get a recording of this if you came in late, but we just basically looked at a couple big picture things. Whenever you have a market that drops, the first thing that I think you should do is kind of look outside of the stuff that you're in, right? Because nobody really cares. Let's say that you're in Google or Amazon, right? And those are very big, important companies, but they don't really drive the trade. What drives the trade on days like today are going to be the products like VIX, the dollar, and the indexes, right? So you're going to gain a lot more traction with your trading if you understand the effect of the indexes and volatility on the stock that you're in. You could spend all the rest of tonight dissecting every tick of whatever you happen to be in. Let's say that you're in Microsoft or something, right? But at the end of the day, you really need to do the work in the indexes on days like today, because you saw most things got sold today, right? So it's an index story. So we looked at the indexes. They are still structured strongly, but they are showing some yellow flags, right? Mostly in the fact that they have mixed signals, and when you have mixed signals, you tend to go nowhere. The main signal that I tried to show you, though, was the VIX and just how coiled up it is and how almost ideally set up it is for a big, big move. So there's that. And then we also looked at two other things, and it's the leadership group, and this ties in together with the indexes. So whenever you look at the indexes, you should ask yourself, what has been driving the indexes, right? There's always leadership and there's laggards, right? Notice we don't talk about utilities at all, because utilities aren't leadership, right? So the two leadership groups as I saw them were the semiconductors and the transportation. The semiconductors hit a major extension target after gapping up vertically for 5 days in a row. So that they look tired, to say the least, to me. And not only that, but then the transportation index looks the same. So just try to fit all that together. And we'll see how high is high tomorrow. Tomorrow, the bulls would have to try their very best to hold the 21 daily simple EMA on the indexes, regardless of what index you look at. That's where it closed. And then not only tomorrow they don't necessarily have to push, but they do have to hold the 21. And then by Wednesday or Thursday, you really want to see a push back to the 8 EMA daily on the indexes. If you don't see that and you see VIX continue to climb, just be very, very cautious, right? Doesn't mean you have to short. It's still very treacherous to short. But it does mean that if you start to see these signals that I talked about hit, just be cautious and size smaller, and don't be so directional, okay? So change your strategy from calls and puts to butterflies and verticals or condors, just anything that benefits from time and is not so directional and can keep you in the game. There's times to push your edge. There's times to go all in, and there's times, and those times are when the market is aligned perfectly. So just think of like a blackjack hand. You know, if you sit down and let's say the dealer has a 6 and you have a 10, that's kind of an idealized situation. Right now, the dealer has a 9 and we have like a 7. You know, so can we still win the hand if you're a bull? You can, but that is not an ideal time to make a big bet. So that's the message of the state of the market today, guys. All right, thank you for hanging out with me, guys. Again, we'll go ahead and wrap it up here, and I hope you have a great night. And I hope you check us out at simplertrading.com. We do this all day, and I think we do a pretty good job of it. So hopefully we get to see you there. All right, guys. Thanks for hanging out with me. Cheers.